You surely wouldn't want to miss this one in mid-May. Did you know that an expert feels there is a very huge risk if owning Tesla stock? While many are very enthusiastic about Tesla and its stock's future, some believe that Tesla's continuous expansion will soon meet a standstill. The largest hedge fund in the world, run by billionaire Ray Dalio, sold all 25,488 of the shares it owned in the Elon Musk-led Tesla. Earlier regulatory filings by Bridgewater had stated that the hedge fund had 25,488 shares as of the end of the previous year. American billionaire businessman and hedge fund manager Raymond Thomas Dalio, better known as Ray Dalio, previously held the position of co-chief investment officer at Bridgewater Associates, the largest hedge fund in the world. Previously renowned as a Tesla enthusiast, Dalio is now endorsing Chinese electric car manufacturers. On November 1st, Dalio released an article titled, "The World Order is Changing. The War Stage is Approaching." Dalio thinks that a civil war or maybe an international conflict could break out in the United States, and if this were to occur, owning Tesla's shares would be extremely risky. Tesla stocks may not be very badly affected in terms of an international war. It is a whole different matter altogether. If an international war breaks out, there will definitely be tensions between countries, which will make it very difficult for foreign companies like Tesla, for example, to operate domestically. Note that Tesla has production plants in Berlin and Shanghai. If that happens, Tesla may have to pay a very high price if they want to continue operating within China, for example. This is probably why Dalio, a former Tesla investor, decided to shift focus to Chinese EV makers. Instead, well, it does make sense to invest in those other companies and not so much into Tesla if the tensions are increasing, and there's going to be a capital war, for example, which almost always comes before the actual war. Dalio also pointed out that there are now classic signs of being on the brink of military war, such as using economic warfare that is existentially threatening. For example, the recently passed U.S. bill that could cut off needed semiconductor chips to China and Russia, cutting off natural gas to Europe, are analogous to the U.S. cutting off oil to Japan in 1941, which led to the Japanese bombing of Pearl Harbor. There are also the classic big increases in military spending that typically come just before wars. Simply put, even though Tesla is a large firm on its own, when a war breaks out, whether it be a civil war or an international conflict, it does not look good from all angles. Midway through October, Tesla shares fell around 50% from their all-time high amid a larger sell-off in U.S. stocks that particularly hurt growth and technology companies. The decline coincided with a broader market collapse as investors, already prepared for the effects of rising interest rates and inflation, were alarmed by the prospect of an economic shutdown. Undeniably, Tesla's dilemmas are numerous. For one, vehicle delivery in the third quarter took a hit due to logistical troubles, and some analysts warned that the climbing prices of the company's cars may also weigh on demand at some point. Also, Tesla's Shanghai factory has faced disruptions due to COVID-19 lockdowns. In the city, the company has also dealt with supply shortages and a surge in raw material costs, as has almost every other automaker around the globe. Moreover, Tesla CEO Elon Musk's highly public attempt to first buy Twitter, then to walk away from the deal and buy it again, has also been a drag on the stock due to concerns that the company's leader is spreading himself too thin between several world-challenging ventures. For these reasons alone, without the threat of a possible war, some experts advise against holding Tesla stock. According to Sean Ross at Investopedia, there are several big risks in investing in Tesla stock. First, Tesla cars are still too expensive, even with generous government incentives, such as tax breaks for alternative technology. Potential consumers of Tesla's Model S are still faced with a large price tag. Even Tesla's new lower-cost option Model 3 is still out of reach for most drivers. The cars are not only expensive for consumers to purchase, but they're also costly for Tesla to make. Vertical Group analyst Gordon Johnson estimated that the company lost roughly $14,000 on each of the Model 3 vehicles it sold in 2018, although these figures perhaps better if the business expands. Second, Tesla might run out of batteries. Third, there is now more competition for electric vehicles. Although Tesla is not the first company to produce cars, it appears to be the most successful so far. Two notable competitors, Chevrolet Bolt and the Nissan Leaf, failed to gain traction early on due to high retail prices and limited driving range. However, Tesla has several plans in place to address this specific problem. Furthermore, Mercedes-Benz and other businesses intend to join the electric vehicle market in the coming years. Ford, BMW, Subaru, and Volkswagen. If this occurs, Tesla's market share might become more congested, and other tech firms might follow suit. The break, according to Ross in an SEC filing, Tesla highlighted on its reliance on Elon Musk. Apple Incorporated believes it can compete with Elon Musk in the transportation industry, and Google has also bet on the auto industry. Elon Musk as Tesla CEO also seems like a big risk. As soon as the second week of November arrived, Tesla shares dropped below 200. The company stated that in addition to Tesla already handling COVID-19 related issues at its most productive facility in Shanghai, China, other factors are also weighing on the stock, which has led to a decline in the shares. As of November 7th at 8:43 am, the stock had reached its lowest level in 18 months. Tesla is heavily dependent on the services of Elon Musk, the techno-king of Tesla, and our chief executive officer. Despite the fact that Tesla's China plant was recently renovated to produce an approximate 1.1 million vehicles annually, the company's shares fell 5%. According to Barron's, the factory supplied 71,704 electric cars in October, which is less than the record-breaking 83,135 delivered the month before. The tight COVID-19 regulations in China, which have led to lockdowns across the country, have hurt productivity, which has in turn affected consumer demand in China. This may be partially the reason why Tesla recently cut prices for Chinese customers, but there may be other factors weighing on Tesla shares that have nothing to do with the company itself. Although Tesla CEO Elon Musk has taken over Twitter, this may not be the biggest worry for Tesla investors. Musk borrowed money to purchase Twitter, so interest will need to be paid from the company's cash flow or another source. Until Twitter's future course is more clear, a number of businesses have indicated that they will not be running advertisements on the platform. This could result in reduced income flow, and Musk may have to pay the interest on his debt with his own money. In order to raise short-term cash, Musk may need to sell more Tesla stock, which could negatively impact the company's stock. Alternatively, other shareholders may be attempting to take advantage of this opportunity, according to Global Data, a data analytics and consulting firm with its headquarters in London. Tesla is one of the top 50 companies based on its proprietary risk assessment of the vehicle manufacturer lecturing sector in the automotive industry country and industry risk pillars. So the company's market position is a strength, but low profitability and a high debt-to-equity ratio could be causes for concern overall. Investing in Tesla stock carries a number of significant risks, but anything that offers a high rate of return also carries some risk. As for the possibility of EV stocks falling below 200, given that they are currently trading at 187.8 cents per share, long-term investors shouldn't be alarmed. In fact, for those looking to hold Tesla stock for years, this might be a good opportunity to start a position at a better price in the event of a potential war, whether civil or international. Ultimately, investors must decide whether to hold onto their stocks or sell. That decision is their own. For a very high probability of staying up to current on more Tesla stock content, please subscribe to this channel.